Hello, everyone. Hey, my name is Jeremy Cronemeyer. I'm with Wickham Financial Group, Operations Manager. I'm here with Graham Wickham, President and CEO of Wickham Financial and Insurance Services. Hey, Graham, I know the market was really busy last week with the Fed meeting and earnings, so give us some insight.
Yeah, absolutely. We had a pretty volatile week. I mean, we saw mostly a positive performance for the U.S. equities, and we did get a good bit of Fed speak and some hawkish comments, which led to maybe the Fed really not acting on interest rates based off of some strong job reports. But we still saw the S&P and the Nasdaq rise about 1%. We saw the Russell 2000 fall about 1%. So we did see 9 of the 11 S&P sectors all gaining ground with some pretty strong earnings reports from Meta. And that might be an understatement in Amazon. They had huge earnings. Communication sector was all in all higher. That's 2.5%. And we saw crude oil really take the plunge, nearly about 8%, as we had the Saudi Aramco ditch some plans that they were going to possibly boost output or boost their output capacity. So we did see the OPEC pushed off a decision whether to expand output until March, putting pressure on those oil areas. If we go over to the Federal Reserve, we did see, again, Chairman Powell dashed some hopes that we're going to see a rate cut in March. They did lower rates. So I think the attention, if you might, is going to be on the next Fed meeting. If we look at the U.S. economy, we did see it at about 353,000 jobs. And I think that maybe had spooked the Fed a little bit, that maybe they don't need to move too quick on lowering rates. They want to see kind of the white of the eyes that inflation is down and going to stay down and be sure that it's going to be down before they lower those rates. So we did see some job growth, job wage growth increase about 0.5% month over month. Now that was double the estimates and jumped about 4.5% year over year. We did see about 70% probability of a rate cut in May. Now, again, we're going to need to see some economic numbers that can reinforce that the Fed should start to lower rates. If we go to some other news outside the Fed, we did see consumers' confidence really shoot up in January as Americans in general were pretty optimistic about the economy. They're optimistic about easing inflation. And we did see productivity advance about 3.2%. For the fourth quarter of 2023. If we go overseas, don't expect the Bank of England to maybe lower rates right now. They just want to be a little more mindful about inflation, kind of like our Fed, before they go ahead and start cutting rates. We did see Europe receive some pretty good news with some headline inflation numbers. Their CPI slowed to about 2.8% year over year. And if we go over to Germany, unfortunately, we saw some rather slow or contraction in their GDP. That was about a 0.3% growth for the fourth quarter. Now, if we go to the week ahead, what do we got? We still are at kind of the mid to tail end of earnings season. We are going to have some of the Federal Reserve members coming out, having some public appearances, talking about maybe their thoughts on where rates should be, so on and so forth. So I'm sure that's going to be something for the news this week. But again, we do have some pretty good earnings announcements that are coming out. Caterpillar was earlier this week, McDonald's, British Petroleum, Disney, PayPal, Uber, the like coming out. Jeremy?
Thank you, Graham. So I had a question for you. So you mentioned that the Fed did not lower rates for March last week, but they thought they would cut. But how do you think that'll affect the investment markets going forward?
Well, I think that's a great question because I think the market, as we saw, had an incredibly strong year last year for a couple reasons, but also the anticipation that maybe the Fed was going to cut 6 times this year. And maybe the market just got a bit ahead of itself, and we certainly feel that way. And we never really thought that the Fed was going to lower interest rates in March. So all in all, we think the Fed the markets are a little bit ahead of themselves, assuming that the Fed's going to lower rates too quick so fast. We probably think it's going to be more June, maybe later in the year. We just need to see the whites of the eyes of that inflation coming down. They want to be sure that it is. And I think the market's just going to have to digest that, which might be a pause. It might be one that refreshes, might, with a pullback, it might be a broadening out of the market. It could be a plethora of different things that happen until we get to the next Fed meeting.
Gotcha. Well, we always appreciate the insight. Thank you for everyone for joining us today. And again, go to our website. We got some retirement planning today classes that are out there that you can go check out for March. So if you or a friend or a neighbor that would like to come, go check out our website at wickhamservices.com, and we'd be glad to have you. And again, thank you again, and we'll see you next week.
Take care.